So there are very few shares out. Is this what you anticipated, or what can you tell people about all this volatility and this huge move up?
I told the team yesterday, get ready for volatility. I'm sure there'll be volatility, but we're not here for a month or a day. We're here for many years, right? We're going to be building a company for the long term. All our shareholders that were big shareholders in Grindr before bought into the transaction. None of them are selling. That's why there's so little liquidity, because the people who own this company believe in it a ton. But it is a really amazing thing to have a company built by a gay founder, by a lot of LGBTQ developers and engineers for the gay community, now kind of out there trading.
Yeah, well, it's clearly got some enthusiasm behind it, and I do want to talk about the business process. But again, 98.2% of the SPAC holders redeemed.
Yep.
So there's a lot less cash in the trust for you. Originally, your original press releases had $384 million. You're nowhere near that. Is that an impact to you in terms of not really having any cash to start?
No, we actually told everybody throughout the entire process that we didn't really need cash. Grindr makes money. It makes money every month. It's a very profitable business. Because our users love our business, we spend virtually no money on marketing. So our margins are very strong and our growth is really strong. So we think we have everything we need to do the work for the long term and grow this company.
Do we know how many shares there are outstanding?
I don't actually exactly know how many shares, but I think it's over 120 million.
Oh, it is?
I think so.
Okay. Stocks halted again, of course, with the volatility. All right, let's talk about the business itself. I think you put up a 42% first half growth rate, revenue growth rate. Is that the kind of number that you anticipate you can continue both the rest of this year but into next year?
Yeah, I think our guidance is kind of in the mid to high 30s for the full year. And then, we think performance will be strong in the years to come. Maybe won't be as strong as it was this year because there is still probably a little bit of post-pandemic kind of support that we're getting from the people coming back into activity. But this business has a ton of monetization opportunity, right? We have a very strong user base that is very loyal to the business, but we've only started to monetize our product in the last 2 to 3 years. So a lot of the features that our peer companies offer as monetization products, we don't actually have yet. We're just building them now.
Such as?
For example, we just launched Boost, this past quarter. That's a way for people to see profiles in many places at the same time. That's literally in Q1. Bumble and Match have had them for years. And so we think for us, monetization is very early days, and we think we can continue monetization in a very rapid way in the years to come.
Bumble and Match have both actually struggled in terms of their stock performance. Is there anything going on in the business where there has been a little bit of a leveling off of overall activity or even the advertising side, even though that's a piece of it?
Well, ad business is a very small part of our business, and we've been very focused on getting high-quality ads into the platform that are actually helpful for our users, which, we think that's a good thing. Majority of our revenue comes from subscriptions, but subscriptions are very new. So we've only been doing that for about 3-4 years, really with a heavy focus the last 2 years. And so we think there's a ton of opportunity to grow subscriptions in the future. Now, ads do matter because we have a lot of international users, and there's a lot more international users to be had in the future. And those, in some countries, you can't charge the same subscription levels as you charge in the US or North America or Europe. And so ads will be a bigger importance there. But subscriptions is the core focus of where we'll be driving monetization.
So it sounds like you have a lot of organic growth opportunities. How about using the stock as currency for M&A? Do you see that happening? I
mean, opportunistically, we'll obviously always take a look at things.
You may want to do it today, by the way.
There you go. But certainly, I think one of the benefits of being public, I think there's 2 really big benefits of being public. One is that you can use your currency for things that you want to do, whether it's M&A or raising capital if you ever need that, or debt, which is easier to get as a public company. Secondly, hiring, right? Like you can hire better talent when you have a stock that's out there because people can look at their stock grants and know what it's worth and kind of be able to monetize that. So those are 2 huge pluses of being a public company, and certainly opportunistically we'll take a look at M&A that ever is up there.
You can also get acquired.
That's not what I'm here for. I'm here to grow an awesome company for our team and our users. Well, it's not. I will always take a look at any offers that come in. That's my fiduciary responsibility, right? But that's not why I was hired. What I was hired to do.
You said you don't really need growth capital. So what you're internally generating enough cash to actually fund continued growth.
Correct. Yeah, we are. Our cash flow is positive, so we can self-fund growth.
How much of the market, the addressable market, do you think you already have captured? Because it seems a lot of your materials say, everyone loves this, everyone's on here.
Isn't it incredible that 85% of the target audience knows the brand? It's like a remarkable number when you kind of think about it.
Right. So in other words, you're just kind of growing only as fast as population, kind of?
No. So if you look at our kind of addressable users, which are not exact, right? You kind of estimate based on how many people we think are in the community, and then what percentage of those users we have. We still have a ton of growth on the user side in North America, in Europe, and then even more growth opportunity in other parts of the world.